Hello, 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 everyone, and welcome to Tech Leaders Hub Fintech. So good to be back with you after a brief break of a few weeks. It's great to be live again for Tech Leaders Hub, and I've got a really special guest here today with me is Ron Shteinberg, CTO at Bounce. Ron, how are you doing today?
I'm good. I'm good. A bit blushing with all the intro, but all good.
Yeah, it's really nice having you here, and having somebody that has known STX Next, and we've known you for quite a while. It's a great pleasure to have you here. So Ron is here, and we're talking about the unseen complexity of building a fintech business. Fintech is our main topic for today. Ron has huge experience in this area, which he will tell us about in just a minute. But first, this is all about you, watchers and listeners. Please confirm for us that you can see us and you can hear us, and the stream is working correctly. Leave a comment and everything is working right on the technical level, because that is hugely important for us. This is getting recorded. That's the first question that we always get. This is getting recorded, but if you're live, you can ask your questions to Ron and get answers for what you're interested in particular. Ron, just one question. While people are still joining in, actually, I wanted to ask you, kind of before we get to the traditional number one tip for tech leaders thing that we do here on Tech Leaders Hub. Given what we're going to discuss today, who do you hope is tuning in? The things that we're going to discuss today, who do you think will benefit the most from hearing about this? What kind of role, industry, probably fintech, but
Yeah.
what kind of situation might they find themselves in?
Think about it, the topics that you plan to discuss today. I think mostly maybe technology managers and maybe product managers who are either building product that kind of starting to go towards building some fintech features into them, or fintech companies, whether those are small startups just starting out or bigger companies who need to scale. I think those are probably the best audience for this.
Yeah. Definitely, given the plan, I think that fits. And we are getting some comments saying that everything works great from Adam on LinkedIn. Thank you so much. Justina is saying, great to see you. Great to see you too, Justina. Thank you for taking a little bit of time to visit Tech Leaders Hub and our humble stream here today. All right, so let's get to the traditional thing then. And one of my favorite things to do on Tech Leaders Hub, I really focus on giving a lot of value to the people that are watching this. That's what we do in our content. So the first question, as always, before we get into your background and your story and everything like that, is the traditional Tech Leaders Hub question. What is your number one tip for tech leaders, Ron?
I guess my number one tip would be maybe don't fall in love with the technology that you're trying to build. At the
Uh-huh.
end of the day, we as tech leaders, we're here to serve the company, the business purposes. It's not about building the latest, coolest thing and most complicated thing. It's about serving the business and helping the business succeed.
Yeah.
And I've seen times where people get too excited about building and not looking at other options that might get them there faster. So I think that would be my number one advice.
Yeah, it's about what you build and not always about how you build it, right?
Exactly. Yeah. Yeah.
Okay, so I love that. Don't fall in love with the technology. I think that's a very important tip, and it's very important to look at kind of the outcome of what you're trying to achieve. So I love that tip, and I'll be happy to add it to the collection of number one tip for tech leaders from Tech Leaders Hub. I would say, once again, it is not a duplicate from the previous stream. So every guest brings something new to the table. We should summarize those in the blog post at some point, I think. Wink, wink, nudge, nudge to the content team. But anyway, so with that out of the way, people are saying Italo here is, I'm not sure if I'm pronouncing the name correctly, but he's saying excellent. And it is thus far. So thank you for contributing the comment. So Ron, tell us a little bit about kind of yourself, your background, what kind of experience you're bringing here to the table that people should pay attention to. It will make people pay attention to what we've got to share on the stream here.
Yeah, sure. So I've been in technology for nearly 2 decades now, although I seem much younger. Started off as a developer, mostly in the telecom industry, building software for microchips and communication systems.
Uh-huh.
Then started managing teams, smaller teams, bigger teams, again, mostly around the telecom industry. Around 9 years ago, I've made the shift, quite a huge one, well, two shifts rolled into one. One was me moving from Israel to London with my family, and the other one was moving into fintech. Basically, my first job in London was with a company called Wonga, which at the time was one of the biggest payday lenders in UK for sure. I think in Europe as well. And that was my gateway to fintech, web development, Scrum, you name it. It was kind of a huge school for all of that. And basically there I started my journey in fintech. I've been in Wonga for a couple of years, ran some really big projects there around building their next generation of lending platform. Then moved to do some DevOps. I ran their DevOps teams. After that, I went to join a startup. I was their first employee. Again, building systems from scratch for lending. It was a consumer lending startup. And basically, there was a series of those kind of joint ventures and startups and companies that I helped build. In between, there were some consulting jobs that I did for bigger companies, couple of the neo digital banks in the UK, where again I helped them figure out their architecture and how to build their credit systems that they wanted to build. And last year I moved back to Israel with my family. I met my co-founder at Bounce, and now I'm the CTO of Bounce, and we're still in stealth mode. So roughly saying we're in the payments sector. We aim to help merchants increase their acceptance rates on card payments. So yeah, wish me luck on that venture.
Of course, and of course we do. So I would love to learn more about Bounce and kind of truly about that, but I am respecting the stealth mode bit of it. Maybe after this session, maybe a year down the line, we'll have you all on the show again, and you can tell us all about that. Anyway, fingers crossed for the endeavor. And I wanted to ask you, this is something that I also ask a lot of my fintech guests because I'm really curious about this. Is there anything in particular that kind of drew you to fintech, got you excited about fintech? You've stayed in this space for quite a long time now. What do you think is keeping you here in terms of getting you excited?
So I kind of stumbled into it, to be honest. It wasn't my aim to go there. It's actually a nice story. Just before leaving Israel to London, I was doing my MBA in Tel Aviv University. And the MBA program was mostly around innovation and entrepreneurship. And as part of that program, they brought us a lot of people to talk about disrupting technologies and disrupting startups. And in one of those conversations, the name of Wonga came up. So when I was looking for jobs in London, that name really kind of stood up to me. And then I kind of searched them up on LinkedIn, and I saw that a friend of a friend is working there. So I reached out to her, as it were. They were hiring as project managers. So I applied. Luckily, out of the 3 people who interviewed me, 2 were ex-Israelis. So at least that made the conversation a bit easier. And they took a huge risk on me, which was great. And then I think after that, after doing Wonga in another company, you kind of realize that fintech, maybe it's true for other sectors as well, but it's a place that really appreciates experience and knowledge. And after you've seen things break a few times, you know how to not break them next time. And it's really a place where experience matters, maybe as opposed to some other sectors.
So yeah, I really like that story. I was thinking, in terms of the fintech space then, right? Because I've heard various things, and I wanted to kind of consult with you, somebody who has a lot of experience here. I've been hearing about fintech ever since I joined STX Next 5 years ago, and it was, I got the feeling it's new, exciting. Everybody wants to get into that space. What do you think about the saturation of the fintech space right now? Is it the case that there's still space for new companies, new innovation, or are we slowly getting to that oversaturation where kind of the competition is really fierce? From somebody who has a lot of, from the perspective of somebody who has a lot of experience in that space, I wonder how you're seeing it. Is it still kind of is there still a lot of room? Is there still a lot of space, or how is the saturation situation here going? I really butchered that question. I'm sorry,
No
but I hope you.
I think I got it. So I
Yeah.
think I would kind of divide it into two. Generally, when talking about fintechs, there are two types of companies that come, at least into my mind. One would be kind of technology companies. So these are companies that are not actually doing the financial services, but provide the tools for fintech companies and other companies to do what they need to do. So we're talking about maybe loan management systems, banking as a service,
Uh-huh.
payment companies, all of these kind of payment rails companies. So I think in that area, there is still a lot of work that needs to be done. I think
I see.
it's kind of common knowledge that the legacy systems that we have today across the world are very old and not fit for today's purpose.
Uh-huh.
If you talk about, paying with the card, that even today takes 3 days for the merchant to get their money, just because still things run in nightly batches of reconciliation, things like that, which is ridiculous today.
Yeah.
So I think there is a lot of still innovation that is waiting to happen. Um, and then around the financial services side, I think there is a huge amount of companies who are doing, 100 different flavors of very similar things. I think that
Uh-huh.
what's exciting is that there is no clear winner in any of those categories yet, right? Because
Mm-hmm.
wherever you look, there is loads of companies trying out very similar, very different flavors of the same thing, but there's no clear winner yet. And I think that out of this plethora of companies that we have who are trying to provide the services, only few would actually survive the next decade and really become,
Mm-hmm.
a force to be reckoned with in the financial services. So I don't think there is a lot of services that nobody thought of yet. Maybe different flavors of things that people are still already doing, maybe.
Okay. Okay. Interesting. And I like that answer because it's not a clear yes or no. As with any experts, it depends, and it can be categorized and split into various scenarios. And that's what I like to get at on Tech Leaders Hub, to actually get the detail that kind of matters here. Awesome. So we got the lay of the land here. Let's get into the meat of our conversation then. And let's start giving these fintech, either startups or companies looking to scale, some kind of tips on how to get ahead and how to, what challenges are probably facing them. You said something very interesting just a moment ago, that you've seen how things can break and how to not break them again. I wanted to latch on to that. So when people are starting or growing fintech, what usually breaks, Ron?
Wow, everything could break. I mean,
Yeah.
if anybody who knows the Wonga story saw how magnificently it broke from being a true leader to going into bankruptcy. But I think again that was a
I'm sorry,
great
Ron.
school.
Could you recap that story? I've never heard it.
Oh, yeah, sorry. So Wonga was a huge payday lender. I think they were one of the first online payday lenders,
Uh-huh.
and a lot of the fintech technologies that we see today were either invented by them or improved by them. Things that we take for granted today, like real-time disbursement of the loan and real-time decision on your credit application, automated collections. All of those things were practically non-existent before they came into the fold and build those things. So things that today is fairly easy for companies to get started, Wonga needed to build everything from scratch. And I think
Wow.
this is where a lot of the things broke down. If we talk about from technical point of view, the fact that you're trying to build something that is very standard in its perception, but you've never done it before, could lead to problems. So
Hmm.
things that might look simple as calculating interest on a loan. I mean, probably a lot of us on this call and this streaming know how to calculate interest of things. But what we probably wouldn't be able to is think about all those edge cases that might happen, all those use cases of customers coming in, doing things, repaying early, repaying late, repaying partially. Like nobody really can by themselves think about all these eventualities and plan for them. So at Wonga, we kind of saw that break. We saw how it break when a product manager maybe wasn't sure about what to do when a customer pays early and how you kind of roll back interest rate. Ended up in Wonga owing, pennies for each customer, but there were 100,000 of customers, so it ended up being a lot of money.
I
And
see.
going on to things like, you need to collect money from customers now, and you're trying to do it in a way that nobody's done before. How do you do it in a way that is both fair but keeps your business safe and earning money? And then from purely technical point of view, how do you scale that fast? How do you collect, hundreds and thousands of accounts in a 5-minute window on the last Friday of the month, kind of thing?
Right.
And all those kind of things are things that I saw break at Wonga. And then as you go on, you can see that other things can break with regulation, with compliance.
Okay. Wow. That is very interesting. And yeah, it really shows that even, when there's a slight miscalculation in one of these algorithms, when you're dealing with money and when you're dealing with, working at scale, that can sink a business, right? Or it can be at least a huge blow.
Don't get me
So
wrong, it wasn't that synced Wonga. Wonga was an amazing company. It wasn't those things that sunk it. It's just I saw how things could break. The syncing
yeah,
was a
yeah,
whole different story that I'm not going to get into. But
yeah.
that's not what sunk Wonga specifically.
Yeah, yeah. Sorry, just yeah. So to be accurate, that is not what did it. But I can see how it can be a huge problem and one of the things that can break. Could you give a few more examples of what else, what other dangers are kind of lurking there? Because I'm thinking, let's talk about the dangers first. Maybe lay out what we've got to deal with, and then maybe how to address them one by one.
Yeah, so I think from technical perspective, we kind of covered it and maybe it will lead to the conversation of build versus buy. But because we're dealing with people's money and business money, um, every small mistake that you make counts. Specifically today, where regulation is so tight on financial services, those mistakes could end up costing a company its life. So that's one part. Another part is maybe around how to treat people fairly, even though that it's money and you need to get that money back from them. How do you
Yeah,
still play fair? But also, how not to basically give those services to people who are not really right for them. How you're being careful about choosing your customers and not leading on people saying, "Hey, come free cash here,"
yeah,
buy now, pay never, kind of a scheme. And this is kind of a very very important thing when you're starting to build the services. I think in the past year there were a few companies that led on consumers trying to offer them financial services, using celebrities on TikTok to sell financial services and things like that. That doesn't bode well with regulators. So we always need to
yeah.
be conscious of who's seeing what you're selling, what they think when they see that, and how do you prevent the wrong people from taking the loan, using your service, etc.
Yeah. Especially when with these loans, the expectation nowadays is that you're going to get your decisions so fast. How can you make a decision that quickly while also being sure that you're not letting people in that shouldn't be let in, right?
Yeah, but I think at the end of the day, it's the the executives' decision to decide what's their tolerance for risk and treating
Mm-hmm.
people fairly. The
Mm-hmm.
fact that you're making the decision fast doesn't mean that it doesn't necessarily mean that you're bringing in the wrong type of people. It's just a question of where do you put your threshold,
Yeah.
and how do you treat people once they gone through that threshold.
Right.
And again, if what blinds you is money and maybe you need to show good numbers to your investors around how many people are taking your products, then you
Mm-hmm.
might be swayed to be more lenient around who you bring on to your service, rather than being careful and being fair.
So that's
And,
another
and I think
pitfall.
specifically in financial services, giving someone your product doesn't inherently mean that you're doing good by them and you're being fair. Sometimes
Okay.
the most fair thing to do is to say, this is not right for you. You should go someplace else or find some other solution.
Wow, yeah, that is very true. I love that perspective. So I feel like we've laid out quite a few of these pitfalls here. I'm thinking just from the top of my head, from what I've heard thus far. Obviously, there's issues of compliance, which we can get to. It's a common thread in fintech,
Yeah.
definitely. Pressure from investors that might lead you to make bad decisions, miscalculations that can have grave consequences. Not to mention all the technical issues. So I'm starting to think, where do we start in unpacking these? I'm tempted to ask you something like, of all these dangers, of the things that can break, of the pitfalls that are here, which is the most common? Which do you think has, sunk or, has endangered the most fintechs thus far?
So I don't want to use the word endanger because I don't think that necessarily those things put them in danger. It just
Yeah.
maybe puts more pressure on them,
Okay.
and maybe make them less efficient about how they do their business.
Okay.
Regulatory stuff could sink a business, but not kind of technical errors and things like that.
Okay.
Those you could usually overcome. So I think maybe the best place to start unpacking that would be maybe around the technical aspects. And I mean, we mentioned a couple of times the build versus buy decisions that
Mm-hmm.
tech leaders in fintech need to make with or without their executive layer. So maybe start there.
Yeah, sure. Let's start with build versus buy. So let's unpack it. Maybe, a short, because I suppose you can make this kind of decision for various parts of your tech stack. So when fintechs are making these decisions, what are they thinking about? What is this usually about?
So I think that I would divide it into several use cases that I've seen that happen. Maybe the first use case would be a case where you've got entrepreneurs or small teams who really want to disrupt some sort of financial service that they see that is a legacy and doesn't work well for customers or
Hmm.
could be suitable for new customers, but they don't come with any experience running financial services or being part of financial services. And part of the biggest problem I see in those teams is just they don't know what they don't know. So
Hmm.
they think that things are simple. Yeah, calculating interest is just, percentage. You learned how to calculate percentage when you were 10 years old. How complicated would it be to do that in scale?
Yeah.
You need to run payments. Yeah, we could do that over a spreadsheet, but then what happens if you've got 2 million customers? How is that sustainable?
Yeah.
Um, so I think that's kind of one type of companies that I've seen. Um, and there, a lot of the work is just persuading them that you really don't want to reinvent the wheel. And yes, making decision of buying something might be very costly at the beginning, but it's something that's going to save you a lot of money later down the line, because everything that you build, you later need to maintain, you need to improve. There's going to be some new feature requests, new products that you need to build on top of that. And once you own that and you build that, it's on you forever now. So forever there are going to
Hmm.
be teams who are going to manage that system. There are going to be teams who are going to be improving them, solving bugs, scaling them, etc., etc. And this is where I usually come in and say, for almost anything that you're trying to do, and I'm talking mostly about, when we mentioned the two types of fintech companies, those I'm talking more about the financial services type of companies, not the kind of technical
Uh-huh.
back office systems that are being built. So for those financial services companies, my tip would always be kind of think about what your offering is, what is your competitive advantage, and just focus on that, and not
Hmm.
and kind of don't waste too much time on building things that there are already systems out there that you could lease, buy. A lot of the things are even open source today. A lot of nice systems that you could just take off the shelf and start using them. Just don't
Yeah.
build yourself what you absolutely don't have to build yourself, and what doesn't give you the competitive advantage that you need in order to win.
Right.
Um,
So two follow-up questions here. One is, do you think this approach that, we're going to build everything from scratch, do you think it kind of stems from the story around fintech? The words that are getting used here is, we're going to revolutionize things. We're going to disrupt things. That sounds like taking what's already here, throwing it out the window and building something completely new? Do you think that people get kind of caught up in this story?
I think it's part that, but part is because financial services today are really opaque. Like people don't really realize the complexity of the systems they use on daily basis, right?
Yeah.
So I gave the example of calculating interest. It sounds super simple when you think about it, but complexity is added very quickly. What if your interest is indexed by labor? What happens if you allow customers to pay early? What happens if a customer wants to top up? What if a customer dies? Like, there's so many things that might happen that you need to think about. But when you start building a new business and you're so super excited about it, you don't give a second thought to the complexity. It's just about, let's just build it. All these other companies are doing shit work. We're going to do it better. We know how to do it. We can do it better than anyone else.
Yeah, I hear that. So it's like this kind of just do it attitude that makes people start businesses. And I mean, this drive is necessary, but then you actually need at some point to hunker down and think about the complexity at play here. So that was my first follow-up question. Second follow-up question. If you were, and I mean, you will reveal as much as you want here, right? But if you were to kind of tackle building a new fintech today, and I know you are, right? So just one or two examples will be enough. Can you give any particular examples of systems that you would buy and not build, that you wouldn't try to revolutionize because what's already there is working well enough?
So going back to the last few years when I was doing a lot of consultancy around fintech, most of my consultancy work was around credit, whether that's consumer credit or business credit, SME credit. And there is always the question around, do we build the system that is going to manage the loans, or are we going to buy something off the shelf? So I'm always, I've had maybe 10 such conversations in the last 6 years of, do we want to buy a loan management system or do we want to build it ourselves? And I think apart from one example that they had a very unique reason why they would build it themselves, all other cases was just buy the damn thing. Don't waste time on building it. And so that's, and in my current company, again, without going into too many details, but we're constantly looking around. What we're building is actually very unique, and there's nothing out there that does that, obviously. But for the stuff that we're trying to do, that there actually are solutions out there, we are reaching out and seeing, okay, like this small part, for example, we were looking for, part of our solution involves protecting merchants from fraud, let's say. So option one would be, we're already building an AI that knows how to process transactions and all of that. We could just build the fraud solution on top of that. But actually, our instinct is to say, no, there are so many fraud solutions out there. Let's try them out before we try to build it ourselves. And because it's going to take us years to get to where they already are now. So why waste that time and make those fatal mistakes? So this is something that is currently in my head when I'm trying to build things. But also in the small things, we're building an application as part of our product, but it's mostly being used by internal staff. So instead of investing resources into building a fancy login page and all the logic that goes behind it, we just took a third party. In this example, it was AWS's Cognito that manages the entire identity, and we don't need to worry about forgot password, login, logout, automated logout for users who are not active, all that kind of crap handled by a third party. We can focus on what we need to do in order to succeed.
Okay, so focus on the core and buy the rest because it's already been mostly solved.
There's a nice sentence I heard recently. I can't remember who invented it, but it's, the main thing is keeping the main thing the main thing.
Yes. Yeah, I heard that once. The main thing is keeping the main thing the main thing. I love that. I should be using that more often. And that is the main challenge, isn't it? I feel like a lot of days that's when you wake up and you're thinking, I didn't get the most important things done, that's because the main thing kind of escaped you. And, on a whole business strategy level, it makes a lot of sense as well. So, okay, so I suppose that's how we could summarize your tips for the build versus buy conundrum. But was there anything else that you wanted to add on top of that? Any other conversations when you have this kind of 9 out of 10, the right way is X kind of thing?
I think kind of the stuff that we talked about so far was mostly around new entrepreneurs with little experience in fintech, thinking that it makes sense for them to build things themselves. But I also saw the kind of the other side of that arc, where you would see people who are executives in huge financial institutions, and they think that like the system they had in their old bank is the only system they know. And therefore, these are the only system they would ever use for whatever they want to build next. So that's another problem, where you are trying to take kind of legacy systems and transplant them into a very new, very modern architecture. And I've seen that not necessarily go wrong, but makes progress and makes scaling very difficult.
Right. Okay. So there's kind of the force of habit is kind of keeping them from innovating here.
So I guess what I'm saying is that even if the decision is to buy, you need to be smart about what you're buying, who you're buying it from, and kind of not latch to things that you already know, but just try to see what best solution solves the problem that you have, or the problems that you're going to have or you're trying to solve.
So I'm curious about the details of this. When you're, let's say you're in this situation, you have a solution that you're used to, but you kind of have the courage to maybe look beyond that and look for something new. Is there any particular way to research this? Any particular, I don't know, websites, rankings, or places to turn to where you can find, what you could buy or what the options and alternatives are?
Actually, not as much as I would hope there would be. In all those times, so every time in my consultancy work that I kind of stood in front of the decision of the build versus buy, and we needed to find what to buy, I was trying not to repeat the mistake that we mentioned, and I never kind of said, oh, I used that systems in the previous project, it's probably best for this one. So every time it was a new research, just to see, is there something new out there? Who's doing something that is new and exciting? Who's doing something that is more tailored to the problems that we're trying to solve, etc. So, and this, very disappointedly, there isn't a lot of material out there that helps you do that. I think at the end of the day, it comes down to network and relationships and people you can ring up and say, hey, have you heard of a system that can do ABC? We're looking for something. And sometimes that, you're asking for a system that can do ABC, but actually what you need to be asking is there a system that does A, system that does B, and system that does C, and I can combine them together to give me kind of the best in the market solution for what I'm trying to solve.
Yeah, I love that. It sounds like we almost came up with a business idea here, a marketplace of systems to buy for fintech. I noted that down in my business ideas to be carried out, this decade.
But I think a lot of it comes from people using terms very freely. And sometimes if you take kind of something that everybody says that they're doing, like banking as a service, you could see like 10 companies who say they're doing banking as a service, but they are so completely different from one another. Then, searching on Google banking as a service wouldn't really help you much figuring out what you want to use. So I think this is kind of, because all of this is relatively new, so there isn't kind of the standard lingo for things for people to use when they search for what they need.
So it's also a nomenclature problem. That's always exciting. I mean, exciting, and of course, it can be a real challenge. So what I'm getting from this is, in order to do this research, one thing to do is to just turn to your network. Maybe have a conversation with somebody like you who can give advice.
Yeah, well, if you would come to me a year ago, that probably would have been great. But I'm busy in other things with that. But there are conventions that you can see new solutions that are out there. Posts on LinkedIn. You could ring up a company who's in business like yours and ask them, how did you solve that? What did you use for that? So there is a lot of resources out there just in form of people, not kind of online Google search type of thing.
I get that. Yeah. So all of this sounds maybe simple on paper, but I did want to get that extra detail because when people watch or listen to Tech Leaders Hub, and by the way, hi again, watchers and listeners, I want them to know the concrete steps they can take. But okay, for build versus buy, I feel like we've got these concrete steps down. Even I could try and follow them at this point, which is always a good indicator that we've got enough detail here. Maybe let's move on to kind of the second bullet point that we had for the the meat of this section. And the second kind of problem that we had identified as a kind of extra prickly here. And that's, I think you mentioned kind of in the prep conversation, picking the right financial model for the business. I just wanted to confirm that with you, though. Is that, you think that is problem number 2, kind of the most important one? Or is there something else that would take this number 2 spot that, with our limited time, we should discuss first?
It's tough for me to think of them in such scale. I think that it really depends on the company and who the founders are. Again, if you go back to the example of founders with little to no experience in finance, then
I wrote them down as the how difficult can it be group.
Yeah, exactly. So that group, for them, it would certainly be number 2, if not number 1. But for other companies, it might not at all be an issue. So I wouldn't use the scale that freely.
Right, I'm trying to oversimplify here, but let us focus on the right financial model then for just a moment here and see and kind of dig into that. What do you mean by that? What kind of options are there? Again, illuminate us and specifically me as to what this entails.
Yeah, so I think again, from my experience in financial services, there is a lot of misconceptions around how they work, what are the real costs of running those type of businesses. As an example, I had a very kind of early stage entrepreneurs come to me for advice about a business they want to build. Part of it was around providing short-term credit for businesses. So I kind of listened to them, idea super nice. But then we got to kind of what's the financial model, how much you're going to charge, how much it's going to cost you. And it sounded to me like what they're planning to charge was really, really kind of very low. And they said, well, what are you talking about? It was like, I don't know, like 4% a month or something like that, or 2% a month, something like that. And quickly kind of showed them how those 2% a month that they're charging is nothing compared to how much it's going to cost them to do that. Because within those 2%, there is an assumption that everybody is going to pay those 2%, but actually, people are going to be, companies are going to be late, companies are going to default. So that 2% over the entire amount that you lend is going to be much less than that. Depends on how good you are in making your risk assessment. And then there is the cost of capital, because to give people credit, you need to borrow, how much you're going to borrow it with. And you also need to pay interest on the money that you borrowed, but you haven't lent out yet. So that's kind of money that is costing you money without earning you money. So those kind of things that people are not very conscious of when they're kind of going that way. And also in the world of payments, people seem to think like payments is huge. There is a lot of transactions out there. People are buying stuff. Companies are buying stuff. If you just get your foot through the door, if you just get, if somewhere on the value chain of a payment somewhere, then there's huge amount of money to be made there. Which in some cases it might be true, but in most cases you're just, fighting for pennies over $1 of transaction that goes through you, because that value chain is already very, very expensive. And it's fine if your customer is relatively small and they don't have any choice and you're kind of the only one who's willing to work with them. They would pay anything. But once they grow, they were like, if you don't cut the cost, I'm out of the door, because there are companies out there is going to do it much cheaper than you do. So I think, again, there's a lot of misconceptions around the cost of doing business and what's the right financial model, and whether that's going to be a viable financial model when you grow and scale. And at some point you need to stop taking money from investors and stand on your own 2 feet. How does that look like?
that is especially pertinent, I think, in the current economic climate when there seems to be a little bit of the brakes being pumped on investment. I've seen this letter from Y Combinator, for example, to the startups saying that it's going to be a little bit different from now on in terms of getting investment. I'm sorry, I'm just really into that. Not sure why I'm mentioning that.
No, but it's a good point. I think now it's kind of out there for everyone to see. So I think very soon we will see which companies have thought about it in advance and are
Yes.
prepared for this scenario, and which companies just said, I need to grab market share no matter what, and didn't give the financial model think over in the last couple of years about whether it's still viable or not.
Yeah, and in that race to grab market share, they're burning money, really operating at a loss. But the financing they're getting, the rounds of financing are covering that, and now they really need to think about standing on their own 2 feet. So I'm going to ask you a very similar question to the kind of previous topic that we had. Well, then, if it's so important to pick the right financial model, and there are these things that can go wrong here that you can kind of ignore and pay a heavy price for it, do you have any sort of approach or framework or strategy of how to do it right? Is there, a list of things that you need to take into account, or like a mindset that you need to have here?
Generally, yes. I think that almost every financial services that you're going to build can be in some way or form reducted to a financial service that is already out there, right?
Uh-huh.
Whether that's, a loan is a loan. There are going to be, million flavors of how you give credit to people and businesses, but at the end of the day, it's a loan.
Hmm.
And as such, there are always people who built things and operated those financial models. And I would urge people to go to them with your financial model spreadsheet and just show it to them and say, like, does this make sense? What am I missing here? Are there any costs that I'm not taking into account?
Yeah.
Would people pay that? Does that make sense? Et cetera, et cetera.
Okay. Wow. So that's exciting because I'm kind of seeing a common thread here already, that it seems like the main mistake is trying to go it alone and trying to figure these things out on your own and not asking external, people, getting some consulting or getting some, some advice from people who already have the experience and have already done it, because it kind of boils down to a very similar remedy here, doesn't it?
Yeah. I think that there are two aspects. One is if you're unexperienced, then you need to get that experience from other people. I think that the other side of the same arc is where, again, those former financial services executives who are trying to build something new, they themselves haven't operated anything financial for years now. They
Yeah.
had a lot of employees under them running the
Yeah.
actual business, that they lost touch on how things are actually managed
Yeah.
on the day to day. And I can think of examples. Well, maybe not good to mention examples, but there were cases where I spoke to people and they kind of said, "Yeah, we need to do KYC." Okay, so how do you want to do your KYC? I don't know. I had people doing my KYC. I have no idea how that actually works. I don't know if they picked up the phone to call someone. Did they send email? Did they send, like, I have no idea how that operated. All I know is that I need KYC, right? So
Yeah.
this is the other side of it, where you need to get connected to people who are actually in the doing of things lately to help you figure out what's the best way to do them.
Yeah, and I think it's an understandable challenge, but both whether you're starting out or whether you're, at this level where you've lost touch, it's like you can't have everything in your own head, right? At some point, you need to lean on the experience and expertise of others. And KYC, just because it wasn't covered on the show before, that's know your customer, right?
Yeah, yeah.
Okay, can you explain that in like 2, 3 sentences for the people who aren't familiar?
Yeah, sure. So a lot of most financial services, they can't really transact with customers before they make sure that they are legit customers, that they are not on
Yeah,
any blacklist somewhere in the world, that they are not laundering money through your service and things like that. So this is around kind of checks and balances to make sure that the people you put through your funnel are legit people and businesses as well. There is also a KYB, know your business procedure,
uh-huh.
where you look into the business, who owns what percentage of the business, who are the directors of the business, and what's the risk of them doing something with the service that you provide.
Right. So KYC in practical terms, it's when I'm starting a new kind of banking app on my phone and it's asking me to take a selfie and maybe take a picture of my ID. That's that procedure, right?
Exactly.
All right. Or although I imagine for KYB, it might be a little bit more involved in taking a picture of like the board of directors, right?
Yeah, so basically no, because at the end of the day, behind the business there are people, and those people need to be identified. So at the end of the day, somebody at the end of that chain will need to take a selfie and send it to someone to review.
Okay. Matt Harris from STX is, hi Matt, thanks for watching. He's saying that it might also be a politically exposed person
Yeah,
that,
yeah.
that you need to
That's what I
check
meant by
against.
various blacklists. Yeah.
Okay, yeah, exactly. All right, very, very interesting. So I suppose the answer here, the kind of the advice here boils down to find that expertise. Whether you've lost touch or you weren't haven't been in touch
Yeah.
yet, and try to get advice on your financial model, second, third, fifth pair of eyes to make sure it's correct, because it can have huge consequences if it's wrong. I feel like we've covered that, and we do have still 15 minutes on the clock. So I thought maybe one more topic we could try and touch upon. Okay, I'm not going to ask you to rank them anymore, but at least on my list, number 3 in order is creating a smooth and exciting user journey. Uh, oh, wait, just a second. We do have a question coming in, also from Matt.
Yeah.
Questions first. That's the rule of Tech Leaders Hub. Let's see what we've got here. So Matt Harris, thanks again, is asking, are there particular service you've used in the past that you would recommend for KYC, or another term I'll have to look up, AML? What would
Yeah.
your advice be
AML
here?
is anti-money laundering.
Oh, right.
So,
Yeah.
so I think very similar to what we discussed around loan management systems, there are so many services out there that provide KYC and AML. Some of them are more local, some of them are kind of more global. I think it really boils down to what is your business, what you're trying to achieve, who's the audience that you need to filter out, and then go out and find what suits you. Whether do you need something with an API, do you need something like that? There are so many options out there that you
Mhm.
really need to figure out what's best for your business at any given time.
That's interesting. You started listing those kind of criteria. Matt is asking a follow-up question very much related. What do you need to look for in a
Can somebody
third-party
shut
service?
down his microphone there?
Too many questions, huh? But you did mention whether there's an API. So what kind of other questions you need to ask yourself just to kind of cover these?
No, so again, it's all down to what you're building. Do you need something that you can use API in order to invoke and work, or do you want to just kind of outsource that service to a third party where you send them an email saying,
Uh-huh.
"Hey, Kuba is joining my business. Can you do KYC on him?" And they will go through the motions as your representative. Um, so what other questions? Again, it was locally versus globally.
Uh-huh.
Whether if your audience is in a very particular area, you might find vendors that specialize in that geography or that type of company,
Uh-huh.
and they can provide you much more insights than if you would have gone with a global provider that will give you very little insights on each individual or company that you're trying to get through.
Right. Super. And honestly, again, that's the kind of detail that is at least giving people like me an idea of where to start looking or what questions to start asking. So thank you. The microphone is now taken from Matt for now, but he is saying thanks right before we snatch the mic from him. Again, thanks for joining us.
Thanks,
So
Matt.
now with 12 minutes on the clock, then I did want to try and quickly cover, if we can, the issue of creating a smooth and exciting user journey. I feel like it's such a big thing in fintech, and a lot of these companies are really competing on the UI and the UX and the great user kind of delighting their users. What is your advice here then? Other than this can be an issue, and obviously bad UX leads to lost customers. What do you think these fintechs should be focusing on here? What do they usually miss?
I think again, I've seen loads of these, and I think what I'm always trying. Again, I'm talking from my experience. What
Sure.
I usually try to achieve in those scenarios is I want to kind of hide my business logic from the user. So my user doesn't need to understand what my internal processes are, what do I need in order to get them through. I need to focus on their journey and figure out what the back office behind that should be. It's not always as simple as it sounds, because sometimes you need the person's ID in order to do a credit check on them or something like that. But there are always ways where you can kind of balance between these two. But the most important thing, and again, it serves two purposes. One is to really give good experience to customers, but on the other hand, if you expose too much of your internal processes, it helps potentially bad actors to exploit that knowledge into trying to trick you to do things that you weren't planning to do. So this is why it's super important to kind of separate these two and have someone focus on the UX. Where things don't make sense, they don't make sense, but as much as possible, not expose your internal processes or your internal architecture to the user. They don't need to know about that. All they want to do is use your service.
Right. So two thoughts come here. First, for example, with this scanning the ID, taking a picture of the ID, it's like you're not asking the user to input the data, one field at a time, which might improve accuracy and might lead to a cleaner database on your end. But yeah, you're actually putting this burden on yourself to have good enough technology to be able to scan an ID. It's a better user experience for them, maybe a little bit more work for you, but that's how you compete, right? Second, I wanted to
not
ask,
only that.
yeah?
It's not just about that, but also around. So you have a banking app, and in many cases, the way that the app looks like, the way it's divided into section, reflects your internal departments and your internal processes more than it is needed for the customer to be involved. I think example I had, well, it was years ago. I think it was when Barclays first introduced facial recognition on their app. So I was super excited, finally they've got facial. I think it was either fingerprint or facial. I think it was fingerprint at the beginning. I was super excited. Finally, I don't need to, put in that stupid code that I keep forgetting into the app to get in. So I kind of enabled that, started using that. But then when I wanted to actually do a transaction, they said, oh no, if you want to do an actual transaction, you need to log back out and log back in with your PIN number. I was like,
What?
that's super odd. And then a few years later, I met someone who was part of the teams that designed that app, who was part of that team. He said, and I asked him about this nonsense. Said, "Oh, don't ask. It was such a kind of storm of issues there, because the person who is in charge of regulatory approvals wasn't up for, like, they weren't ready for fingerprints yet. So they said that for this type of transaction, I still need the PIN number because the risk committee hasn't decided yet." And you hear that and you just want to explode, right? But this is what I mean. Like the app and the service doesn't need to reflect, or it mustn't reflect your internal processes. It needs to be reflective of what the user actually wants to achieve when they use your service.
Right. Yeah. So I suppose that's an example of regulation kind of slowing down innovation. It's like they had the technology, they had the solution, but because the regulations weren't there yet.
It was more around internal compliance than regulations. Like regulators don't care how you identify a customer, whether that's a PIN number or fingerprint or whatever. It's your internal compliance team who's not ready yet for the huge innovation of fingerprint identification on your iPhone.
See. Okay. I really appreciate you putting my kind of the story straight here, because I can be led astray sometimes, and you're keeping things accurate. I really appreciate that. So one thing that I'm still curious about, and honestly, just because I'm trying to visualize it and I can't yet, how could it be that through the structure of your app, you could expose too much of your business logic? Because I can think of, okay, the menu in this bank really reflects kind of the departments and the teams in this bank, and not the kind of natural path that I would take as a customer. But exposing the business logic, could you give an example of how that might happen?
Again, an example that comes into my head, and I'm not talking about any app specifically, just as a rough example. Let's say that this is a banking app, and you've got your kind of transaction page, right? So in some apps, you would have, this is your transaction page. Do you want some credit? Here's a button to ask for credit. instead of just saying, oh, this is just an example, this is a transaction that I would like to finance, why won't I just click on that and you would help me finance that? Right? So this is kind of those two departments mixing in together. Instead of you need to click a button, then you're kind of shoved into our credit department who's going to take care of you going forward.
Right.
That's my idea of not reflecting the internal processes.
And then the page maybe reloads, or a different kind of part of it loads. So you're thinking, okay, this is a separate maybe function. I'm not too well
Yeah,
versed in
it could be it could be kind of sleek and still look the same and everything, but in the worst cases, it might be, oh, if you want to take credit, now we need to ask you for these details, which the other department already knows, but this is a whole new department, etc.,
Yeah.
etc. Just to kind of, as a rough example, it's not an online one, but moving back to Israel, we wanted to buy a house, and we went to ask for a mortgage. So I went to one of the branches of the bank where I run my everyday accounts, asking for a mortgage. And obviously they send me to whoever handles mortgages, because that's a different department. And that guy asked me to send him 3 months of statements. I'm like, dude, this is my bank. Just log into your computer and see my statements. No, this is a different department. I can't see your debit accounts, and they can see mine. And this is what I'm talking about. This is kind of in real life experience, but a lot of the financial services that I've seen are kind of mimicking that in the digital world as well.
You can really see the silos in front of your very eyes there. I get that. From a different kind of area, but I've had this thought quite often. It's like whenever I go to like a new doctor or something, it's always the same sheet. What are your allergies? What is your kind of personal information? All of that. I'm like, why isn't there a database for this yet? Even when my wife was in the hospital, and my son was about to be born, and she was kind of getting there in terms of being quite close to the actual moment. She still had to fill out this sheet. What are your allergies, kind of existing health issues. And I'm like, at that point I really thought this should be in a database already somewhere, tied to her, I don't know, ID number, and she shouldn't have to fill out that sheet, especially in the state that she was in then. But anyway, yes, exactly. So this can be a major pain. And oh gosh, would you look at the time. Ron, I felt like the conversation was just getting started, but the promise of Tech Leaders Hub is about 60 minutes. Some people definitely have plans starting in just a few minutes from now. So all that's left for me is to say, well, I'm going to say that a few times, but thank you so much for sharing all of your expertise. Yeah, I mean, it was a pleasure. Do you have any announcements for our audience? Anywhere you would like to direct them to? Where can they follow you, follow Bounce, or maybe you want them to see something else? Have you got anything to share like that?
Yeah, so I'm on LinkedIn. I'm sure you showed the link. I'm also on Twitter, although I'm kind of quite passive and recently more Hebrew speaking than anything else. Around Bounce, yeah, watch this area. It's going to be super, super exciting when we get out of stealth. I'm super excited about what we're trying to do. It's something that honestly solves a huge issue for so many merchants that we're talking to, that when we pull it off, it's going to be amazing. So yeah, keep tuned in.
Can we share the URL of the site or not yet?
It's currently just very kind of simple landing page, but it's bouncepay.io.
Yeah. Okay. Yeah. Right now it's just a landing page, but bookmark
and
it.
if
Check it
if
every
you
week.
are, or online merchants who processes maybe thousands of transactions a month, reach out, let's talk, and maybe we could help you as well.
There you go. Yeah. So that is certainly something to consider if you are in that kind of scenario. And from our side, if you're meeting SDX Next for the first time through the stream, super happy about that. Hi, we're SDX Next. And the way we fit into this whole tech area is that we provide teams of developers, designers, DevOps engineers, machine learning engineers, and much, much, much more to drive companies in the fintech space and others. We have a lot of experience in fintech. We've attracted some of the best talent here in Poland, and we can put that talent on your project faster than you think if you reach out to us at sdxnext.com. Just use the contact page and you can reach out to us. For more Tech Leaders Hub, techleadershub.com is where you should go. Subscribe to our newsletter and you'll be informed about upcoming streams. Follow STX Next on LinkedIn, where we share the most of Tech Leaders Hub, including clips, the best of Tech Leaders Hub, and some additional blogs and other pieces based on Tech Leaders Hub sessions. So STX Next on LinkedIn, stxnext.com, techleadershub.com, any of those, and we'll be super happy to see you there. And in terms of being super happy, I mean, I'm super sad that it's 4 p.m. here in Poland and we're about to finish this. But this was such a great session, Ron. I feel like we shared so much value and so much actionable advice. So I wanted to really thank you again for being part of this.
Thank you. Thank you, guys. Thanks, everyone who's listening.
Yeah, thank you all, watchers and listeners. This was such a pleasure. So good to be back. Stay tuned. We have 2 sessions planned, if all goes well, for next week. One of them with our very own Jose Mendoza about STX Next Mexico, planned for Tuesday. The LinkedIn event should be up very, very shortly for that. So we'll see you there and for future Tech Leaders Hub sessions. And for now, thank you again, Ron. And all of you, have a nice day. And with great sadness, I'm going to click the end broadcast button now.